Hello and welcome to the Bullish Bears YouTube channel. I'm Jeremy and I'm going to start a series with this video and we're going to call it Advanced Charting Techniques. And essentially I'm going to walk you through kind of a journey of what I learned on the way to where I am now. And I'm going to start with some of the early stuff, and I find that it helps for beginner traders greatly because understanding how these worked greatly helped me become the trader that I am today. I don't even need to use them anymore. Let's just say that. But you got to start somewhere, and this is a great place to start with simple indicators that work really well. The first and probably the most simple indicator I learned how to use was Bollinger Bands. And in the description of Bollinger Bands, when you're reading it, you'll understand that you want to trade signals when Bollinger Bands pinch together and you get a bullish buy signal from the chart, whether it's a lower band poke or in this case, a 20 period support test with a continuation afterwards and a trend. That all helps, but for a beginner trader, that's not the best trading signal. It's not an easy button trade, so to speak. You had to be pretty savvy to catch on to this one, and if you were just using Bollinger Bands, you probably left a little money on the table if you bailed early on like this upper band poke or this upper band poke, even though the trend was walking that band. They don't always tell you that in the description. Secondly, in the description explaining what Bollinger Bands are and how they work, it also tells you that you should use this in combination with a secondary indicator. I kind of think of Bollinger Bands as a secondary indicator to begin with because my primary indicator is the price action itself, which is indicated right on the chart that I'm looking at. That's the candlesticks. If you utilize it that way, you can find that your trade signals are a little easier to interpret. All you got to do is look left, figure out what happened before and where am I likely to go again. That takes a little bit more technique to learn, but first let's start with the simple stuff. So the Bollinger Bands would tell you, okay, you have a trade signal here, lower band poke, we have the bands contracting. This is where you start looking for an entry. If you were looking for the Bollinger Band pinch and the signal to buy, it would have been right here, this test of the 20 period and this quick burst of buying that came in. Some people would use volume as a secondary indicator, and I never liked using volume for anything other than daily volume profile for a day trader. For a swing trader, volume doesn't always matter, and here's why. The chart tells you there's volume here. The size of these candles tells you volume, buying. Yes, it fell off a little bit. More volume, buying. Yes, it melted up slowly. Some of the volume fell off a little bit. Ha, volume selling. Okay, so if you traded from here to here, you got a pretty good sizable move out of Google. You had an exit signal here, but did you really? Yeah, you had a Bollinger pinch here that told you look for a buy signal. We had a buy signal. We have a trend that walked the upper band. We have Bollinger Bands expanding here, followed by an upper band poke and a pullback to the 20 period. So if you captured this trend, you did pretty good. And if this was all the chart you were seeing in real time, okay, decent little trade. You did pretty good on that. And you traded within reason of the previous range, which was pretty choppy. So now, if you're moving forward with this, you kind of realize, okay, I should use a secondary indicator to verify my entries and exits because by this point, you missed a huge move up. How would you have caught that? My first secondary indicator that I used on the chart, aside from Bollinger Bands, was just a simple 8-period moving average. On any time frame, I could verify that trend is strong when price is on the upper side of an 8-period simple moving average. And in combination with the 20 period, you also get the other thing that a lot of traders like to look for is moving average crosses. So here we had the 8 crossing above the 20. Good buy signal here. Sure, if you jumped in with this one, you got basically taken out with your stops on this hammer anyways. You should have waited for the Bollinger Bands to pinch. Bottom line, ignore that signal, wait for this signal. Okay, cool. But once you're in, to stay in that trend, within reason, Price stayed above the 8 period until this point. If you're confident and you're moving your stop loss up like you should be, you would be able to sit through this pullback as long as you realize that, yes, price did break below the 8 period, but if you were looking at this in real time, let's just slide it off the end of the chart. It tested the 20 period, but the 8 period never curled down until after the fact. It went flat, but it did not curl down. 8 period and the 20 period both stayed strong. The trend was intact. Move on a little bit, and then you suddenly had a moment where it rode that 8 period, walked the upper band, and then all of a sudden it tested the 8 period. Both the 8 period and the 20 period were slightly curled up, a little steeper. Trend was gaining strength. That told you to stay in this. And voila, you got paid very well if you ignored the upper band poke, if you ignored this wick up here, and you took your profit when price crossed below the 8 period. You did great. You got the meat on the bone, so to speak. You didn't leave much money on the table in this move. Let's go a little further with this. In this series of indication of staying with this trade, this is all you really needed. Still, the fallback is you kind of need something that gives you a third-person point of view or something that concurs with your decision to stay in this trade. Not everybody would have picked that off. That was a very tough trade to grab and stay in. Stochastic was my favorite secondary moving average above RSI, above pretty much any other secondary indicator on a chart. The fast stochastic made the most sense to me because it gave me very clean and very sudden signals. So in staying with this indication of buying here, yes, we confirmed. Right here was where we should be looking. And even though the Bollinger Bands were wide, they were contracting. Once these indicators crossed above the mean, you also had a moving average cross. Pardon me. You had a clean buy signal back here where you could look for an entry or start looking. And you had confluence of Bollinger Bands pinched and then started to widen just a little bit. You got your indication of an entry here, even though you could have taken the trend down here on the first signal with the secondary. Okay. Barring the secondary indicator as something that tells you to take your trades, hands down, because you don't want to just follow it, you had a pretty good opportunity to grab a long here and stay with it in this trend. It did give you a false sell signal. It has its drawbacks, but if you're not seeing all three of them confer, you're still confident in a trend. So if you're using a secondary indicator such as a fast stochastic, and RSI would be similar in giving you that false sell signal here, you still did okay because your job is to have at least, if 2 out of 3 isn't bad, 3 out of 3 is even better. Everything confers that this trade was still pretty good and you can still stay in it. Until you get to that first pullback, and then you had the price cross below the 8 period. You also had a sell signal here, as in the trend was getting weak. And it gave you a valid sell signal, so you weren't taken down in this pullback. Okay, and it gave you a decent exit. Okay, you left a little meat on the bone up here, and that's perfectly fine. You still had very good use of when to get out of that trade, and it gave you a very clean signal there. So using all these indicators in succession, especially for a new trader, will help you to develop the confidence you need to stay in the trade, as well as being able to plan and execute your trade all in one foul swoop. You had pretty strong indication that the trend was strong with the Bollinger Bands. You had an expansion here suddenly. You got volatility increasing, but price staying up in the upper band and also walking along that 8 period. You didn't have anything indicating that volatility was falling off here until this point here, which was already too late after that pullback. So this would have been stay in it. This would have said get out. And this would have said get out. So now you have 2 of the 3 telling you, okay, maybe I should consider an exit. And it was pretty accurate at telling you when to get out of this trade. So that works. This is basic stuff compared to some of the more modern advanced charting techniques, but it gives you a good place to start. And as a beginner trader, if you're already looking at advanced charting techniques, you're on the right path. But definitely slow your roll and absorb this. Learn this, observe it more than anything, practice it in paper. Whatever you got to do to build your confidence in ability to read this and actually use it. That's where you want to start. Once you've mastered this, there'll be some other techniques you can learn to advance your ability to read price action even more in the near future. All right, I'm going to wrap up this first video in the series with that, and I want to thank you for liking and subscribing, and we do appreciate your support. Above all, tell your friends. We love being able to help others. Thanks again. We'll see you in the next video.